This is our blog video for July 12th, 2012. And like we do most days, we want to buy the strong currencies versus the weak and sell the weakest versus the strong. This is our currency meter that statistically analyzes and compares every individual currency to every other one on multiple time frames. The real-time trend is on the top in histogram form. Anything at and above the 80 line is extremely strong or weak, depending if it's red or green. And it's made up of 5 different tools averaged together. 5 different statistical methods that we've come up with over the last 6 years. 3 of them measure the direction the yen is moving, if it's going up against 75, 80, 90, 100% of other currencies. And 2 of the 5 tools measure the intensity of direction. So if a currency is going up against 80 to 100% of other pairs, and it's doing so with 100 to 300 or 400% intensity more than normal, you're going to see extreme readings. And during, anytime you see extreme readings followed by a pullback with almost no intensity or a very small percentage of yen pairs are getting weak, that trend's very likely to continue, which you can see here it does. Underneath that, we have the 15-minute, hourly, daily, weekly, monthly trend. Obviously, when all the time frame trends line up, which they don't do every day, you can see that New Zealand's extremely weak on every time frame, except the monthly trend's still up. Monthly trend can take a week, sometimes 2 weeks to change direction, even after multiple down days in a row. So anyway, getting back to this, the yen's very strong, the dollar's strong, the CAD's strong. The weakest ones are the Australian, the Swiss at times. The euro really doesn't have much strength earlier, but it does start to get weak here at 5:30, and the Australian is extremely weak. So you want to sell the Australian dollar, you want to sell the Australian yen. So you bring up those charts. So the step 1 of our 3-step easy system is 1, use the currency meter and identify the ones that are most likely to continue to trend. Anytime you have extreme weakness followed by very little strength, that weakness is likely to return. It's that simple, especially the more time frames that are in alignment with it. Personally, when I'm trading, I'm mainly looking for the real-time trend, and I would like the 15-minute trend to be really dark red too, and ideally the hourly as well. If the daily is slightly uptrend, it doesn't really even matter, but if it's also down like it is today, that's wonderful. The weekly and monthly trend are such longer term trends that it really doesn't matter for an intraday trade. You can get a 30 pip move frequently even if the weekly and monthly trend is up. Now you can see the weekly trend shifted down a little bit after midnight and got really weak at 5:30. So we're going to look at the Australian dollar, and you can see clearly last night it broke down from above to below the hourly moving average. I have the Fisher, which is another tool on here that shows what a decent sized pullback is. I'm going to be releasing this soon. This is a new indicator. Anytime it makes its way up to the dotted upper line, the market's overbought and likely to reverse. And when it gets down to the lower level, you can usually expect some kind of a stall or a move up. So, this one's the trend's down. You can wait for a move up, and you can also wait for trend reversal signals. You can see the first signal failed here because the market was still, oversold. It needs to go up a little bit more to reset itself to begin a new downtrend. And a lot of our counter trend signals that show up as circles. The best counter trend trades are at our 3.0 green band. At this level right here, I wouldn't have personally bought this because look at how blood red it is. It is extremely weak. However, the market did go up about 30 pips. So you go short right here, 55. Use our trailing stop to get out. You can see it went down to 20. It's a 35 pip move. And earlier, some of the best trades are right at the beginning of a trend. Here's the first pullback trade. The beginning of a new trend, the first pullback trade, you certainly can take that trade. Once it's down underneath the white band, it's less likely to work. So that's the Australian dollar. Let's take a look at the Australian yen. Also extremely weak today on most time frames. And, again, you never want to sell underneath the green band. This is a decent sized pullback off the low. It went from 36 all the way up to 66. I can add the Fisher to this so you can see how it looks. And I'm considering adding, releasing one that just has the red and green lines. You can see it came up to that level here. This is where it becomes more likely to reverse. You got a sell signal here. The previous day's low is right there. You go short when it goes 1 pip underneath the low, short at 59, and it looks like it got you out here with only a 10 pip win. You might have drew your fibs off the previous swing and waited for that area to get hit. That's most of the time where the market's going to go to. You can see it did pretty much went to that level, maybe 1 pip below before it reversed. So those are two extreme weak currencies today. The euro became really weak at 5:30, and it never really, anytime you see a lot of weakness like that, look before it. Does it have incredible strength before it? If so, it's not as important of a trigger. If you see extreme weakness and it never really had that much intense strength before, that's wonderful. Look, the 15-minute trend and the hourly trend never really had more than just a few bars worth of intense strength, and it went back to very little mild strength. And the daily trend as well. The weekly and monthly trends down. So when you see that pattern show up here, the euro is very likely to go down. You want to sell it versus the stronger ones, the dollar and the yen. So we're going to bring up the euro-dollar chart, and you can see here around that time you got a sell signal right here. Nice drop from 20 all the way down to 70, 50 pip drop. And you can also see some other trades that didn't really call out on the chart yet. A nice pullback here using the Fisher. It's gone up enough, and you can see it pretty much nailed the high on there. The Fisher is a wonderful tool to be used in the strongest trending currencies. If a currency is super weak like the euro dollar, and it kind of gradually works its way up, a lot of traders don't know when it's quote unquote safe to sell. How much of a pullback up is enough pullback to take a trade. Some of the highest probability trades, you can see it only hit the upper extreme level twice today. This one right here, which then proceeded to fall 50 pips. And then again, right here, it was showing that it's likely to reverse. You get a sell signal right here. And the market really hasn't had that much time to go down, but it fell from 22.05 down to 90. It fell 15 pips. Now keep in mind, 10 pips a day can double your account every 2 months if you risk 2% per trade. So the first trade is a very big trade, but even the small one right here is a good, decent amount of pips to make in a day. 15 pips a day, 75 pips in a week, 300 pips a month. In about 5, 6, 6.5 weeks, doubles your account if you get 15 pips a day. So it's very significant, very nice. The euro yen, another good one to look for sells. And just looking at the chart, it's clear. It's blood red. A lot of traders are just using our trailing stops to get in, out, and small, pretty much break even here, in, small profit, And once it gets down to the lower band, it's more likely to reverse up. And these dark gray lines are Fibonacci profit target levels. I spend about 30, 40 minutes every night doing Fibonacci analysis, Fibonacci retracement work. The Fib profit targets show up in dark gray. The Fibonacci retracement levels show up in light gray, and usually they're in the middle of the range, not near the lower bands. So anytime you find one of these and it's at or underneath our 2.0 white band, it's very likely to reverse there. Now, what if you're a counter trend trader and you want to buy the lows? Well, I'm showing this because I plan on releasing it soon. If you put the Fisher on there, and I'm going to put the colored one on. Anytime you have a double bottom, or in this case slightly lower low than before, and the oscillator reading is higher than it was before, in other words it's less weak, that's a very good divergence indicator, and this thing's going sideways here. As soon as it goes above the highs of that sideways range you're in at 50, and you can see it went up to 65. It went up 15 pips and then kind of went sideways. So it's a wonderful tool, and also you can use it in other cases, to trade with the trend. This one fell down, retraced back up. Notice it's right near the overbought level, so this becomes a much safer trade. Kind of goes down and kind of tries to go up here, and this has a lower high than this. Didn't quite make it back here, but sometimes you see a double top right here with a lower high, the exact opposite of what we show here with a higher low, and that's a good reverse, good trend continuation pattern. And that's the main reason I'm going to release this, is hoping that it will allow traders to be a little bit more picky. Once you identify using our statistical tools, this tool is oftentimes wrong. However, when used in context in the strongest trending currencies to only trade in the direction of the trend, in other words, and only look for counter trend trades at and below the white band. In other words, right here it showed that it was oversold, just mainly because it just started drifting down and never went up. That's why this indicator, shows that. But it's nowhere near our lower bands. So you don't want to be buying right here. You want to look for buys at and below the lower white band if you're going to do a counter trend trade. So this kept going down. You can see another divergence trade, higher lows than before. And when it broke out right here, it went up a decent amount of pips. This tells you it's reset itself, and it's time to look for another sell. And again, the market went down.